Hello there, this is fairbinaryoptions.com, and I would like to talk about the all-important Euro-US dollar, because next week we have the European Central Bank coming with the interest rates, and of course with the press conference on Draghi. And not more importantly, but equally important, we are going to have the unemployment rate and the non-farm payrolls in the United States. So basically the other side of the story in a currency pair. It should be mentioned that when you're trading, you're not trading a currency first of all, but you're trading a currency pair. So what Draghi might give, the non-farm payrolls might take away, as we should look for both sides of the ocean for information on how to trade a currency pair. In the Euro-US dollar, I would say we have a classical impulsive move, with either this one here being the first wave to the downside, like this, or this one here. It doesn't really matter. What is changed is only the extension for the third wave. If it is like the impulsive move to be done here, then we have the extension already completed by the time the market already reached the 161.8. If this is the first wave, as you can see, 161.8 is on the gap. I think that most likely the first wave is done here with a classical first wave extension, 1, 2, 3, 4, 5. And in this case, take a look where 161.8 comes, exactly where markets close here. Now, what is this move here? Well, this move here is nothing but a double three running, it is being called, with this from here, from this moment of time, to be A, B, C over flat, and then an X wave all the way to the downside here. X wave all the way to the downside here, and then a contracting triangle that goes A, B, C, D, E. Any double three running is ending with a contracting triangle, and this contracting triangle here acts actually as a reversal pattern, because it is forming after a corrective wave to the upside. Now let me change the color for this one, as I want to show you something, that the third wave to the downside, believe it or not, it is forming exactly the same thing, or exactly the same pattern for the corrective wave. Now, if this is already completed, 1 and the 2, of course I would say that the third wave is done here, or is about to be done in these levels. So these levels are supposed to be bought, or to buy call options on here. How about the move that started from here? Well, the move that started from here goes with another 5-way structure, but this 5-way structure to go like this of a lower degree should be, the first wave should be done here, and this to be the first wave, and then the second wave is all the way to here in this contracting triangle here. So 1 and the 2. How about the 161.8 extension? Well, I would say that this is already the extended wave, 3, 4, and 5. Now, the reason why I'm showing you this impulsive move to the downside is to show you the principle of alternation between, take a look at how the second wave here on this impulsive move, take a look how the second wave here how complex was, and how the fourth wave, how small the fourth wave was here, either like this or like a triangle. The same should happen on the bigger degree here, with this being 1 and 2, and the third wave completed. It means that the fourth wave, so what should we expect heading into next week, is a bounce like this, or the fourth wave to be something like this, and like this, or either a zigzag or a flat or a contracting triangle, but that's it. Only a simple correction, not a bigger correction. So I don't know if that gap is going to be closed, but I would like to sell any spike above 32.50, 32.70, each and every spike. I would like to sell it for, maybe you will have the spike with the ECB, with the press conference, because I don't think that the guys are going to cut the interest rate on this Thursday. But again, what Draghi may give the non-farm payrolls, the unemployment rate in the United States may take away. So the fifth wave to the downside here normally should threaten the all-important now 130 level. Now, how to trade this one with binary options is pretty much simple. I would go and buy call options at the opening on Monday, and of course put options by the time the gap is closed, and that would be the recommendation on the euro US dollar. So looking to buy, or the first thing is buying call options with end of week expiration date for the euro US dollar on Monday. And of course I would like to go and buy put options by the time the gap is closed with end of week, of course, expiration date. If that is happening on Friday, next Friday, no problem, we'll buy them with end of day expiration date, as end of week will be on that Friday. Thank you very much for being here. FairBinaryOptions.com, and we just took a look at the euro and the US dollar and how to trade it into next week. Have a great day. Bye bye.